Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go over an article that I was reading. I think it's a very well written article. I agree with it very much so. It's probably an article that has made the most sense to me in a long time. So whoever wrote this, I think, has their head screwed on straight. At least that's my opinion. And I'll go through it and hit some of the key points in the article that I think everyone should know. So let's dive in here. Let me close some of this out. It says the housing market predictions 2022 to 2025, crash or boom. And I know a lot of people think that the housing market is going to crash. I don't think so. I think that the rates will slow down. I do not think we'll see a crash. And this person, I think, highlights a lot of things. They've obviously correctly identified a lot of things that I think the market is undergoing. So it says, in light of what real estate professionals are forecasting, let me zoom in a little bit more. In light of what the real estate professionals are forecasting, there are some educated predictions about what the future of the United States housing market will look like. It says, prices are rising due to a mismatch between supply and demand. But this is not a housing bubble. Many experts predicted that the pandemic would cause a housing crash on par with the Great Depression. That, however, is not going to happen. The market is in far better shape today than it was a decade ago. The housing industry has had a boom last year with the largest annual gain in single-family house values and rentals, historically low foreclosure rates, and the highest number of home sales in 15 years. And what has caused this? Over the past decade, chronic underbuilding and the influx of millions of millennials into home buying market have resulted in a major mismatch in housing supply and demand. Exactly what I think. This guy has got it on. He's on it. Despite the fact that mortgage rates are skyrocketing, housing prices are not expected to slow down anytime soon. The most likely effect is a slower rate of appreciation. He gets it. He gets it. It's exactly what I think. Exactly. And it's the supply demand imbalance, and that rates will just slow the rate of appreciation. I agree. The April 22 housing statistics released from Realtor.com demonstrates that housing demand has continued to moderate despite rising property prices and mortgage rates. In April, the median list price of home reached an all-time high, while the number of pending listings, those in the process of being sold, decreased. Additionally, sellers have returned, and the number of newly listed homes has finally increased compared to the same period last year. In the following weeks, inventory is also expected to increase relative to last year. So buyers who are able to remain in the market this year may encounter less competition and more options. And that's what the market naturally will do, but it's going to take time for this to work its way out. And this is what the experts predict will happen in the housing market in the coming months and years. The sharp rise in mortgage rates is driving away more home buyers, but it also appears to be discouraging some homeowners from selling. With both demand and supply falling, the market is unlikely to shift from a seller's to a buyer's market anytime soon. And again, remember, the rates may not go up as much. Not the interest rates, the rate of home prices. It'll slow down some, but it takes time. Rising mortgage rates may take some time or may take some of the steam out of the market, allowing inventory to rise slightly. It would also slow the rate of home appreciation, price appreciation, and reduce the possibility of a red-hot housing market, resulting in an overheated market. The supply of available homes is so low that even a significant drop in demand due to higher interest rates will not turn this into a buyer's real estate market, according to industry experts. And I agree with that. Because there's not enough houses available to meet the demand. Home prices will continue to rise, but the combination of rising home prices and elevated mortgage rates means fewer people will be able to afford to buy. There will still be continuous price appreciation, scarcity of inventory, and good demand. Some markets will experience lower appreciation rates than others, with the Sun Belt performing particularly well. This is the home price appreciation across the nation. I'm in Colorado by Denver, Phoenix, Las Vegas, LA, San Diego, Chicago, Washington, Boston, Miami, and Houston. It looks to me that the West and South are outperforming the North. Will the housing market crash in 2022, 2023, 2025? The overarching question is that will the housing market crash? The simple answer is that it will not crash in 22, 23, or 25. Rising rates aren't cooling the market as some expected. The current trends in the forecast for the next 12 to 24 months clearly show that most likely the housing market is expected to stay robust, with many of the trends that propelled real estate to new heights last year remaining firmly in place this year as well. In recent years, the price of homes have climbed dramatically. Many prospective buyers, especially those with limited financial resources, are eager to hear whether or when home prices will become more accessible. It says, here's when housing market prices are going to crash. While this may appear to be an oversimplification, this is how the markets operate. I really do like this article, guys, because he goes in and describes how things should be working and how it works. When demand is satisfied, prices fall. When demand is satisfied, prices fall. In many housing markets, there's an extreme demand for properties at the moment, and there simply aren't enough homes to sell to prospective buyers. Home construction has been increasing in recent years, but they are far behind to catch up. Thus, to see significant declines in home prices, we would need to see significant declines in buyer demand. It is that simple. And we don't. Buyer demand is too extreme for how many houses we have. Demand declines primarily as a result of rising interest rates or a slowing economy in general. Ultimately, for rising interest rates to destroy home values, we need substantially less demand and far more housing supply than we presently have. The combination of those two things. Even if price growth moderates this year, it is extremely improbable that home prices will crash. I completely agree with this guy. Thus, there will be no crash in home prices in 2022. Rather, there will be a pullback, which is normal for any asset class. The home price growth, he's saying a pullback in the growth of home prices. The home price growth in the United States is forecasted to just moderate or slow down in 22 or 23. So it's the slowdown in the growth rate, not a crash or decline. Ultimately, for rising interest rates to destroy home values, we need substantially less demand and far more housing supply than we presently have. So that's what we've got there. Mortgage rates are expected to increase somewhat, but stay historically low. Home sales will reach a 16-year high, and price and rent growth will drop significantly compared to 2021. The growth will drop. Affordability will be a concern for many as home prices will continue to rise, if at a slower pace than the previous year. And then he goes into the 10 years we've been in this bull market. The real estate pace of last year's appears to be reverting to seasonality as we approach 2022. Demand is not waning, at least in his opinion. Increasing interest rates will certainly have a greater impact on the national housing market in the early months of 2022 than any other factor, while sellers remain in an advantageous position. Price stability and the continuation of competitive interest rates may provide some much needed relief to buyers this year. Housing supply is and will likely remain a challenge for some time as labor and material shortages, as well as a general supply chain issue, delay new construction. So coming on down, we've got overall, the market is tight supply, huge demand. That's what we're looking at. It says, let's look at what experts forecast regarding the U.S. housing market through at least 2023, and you'll get a better idea of what to expect. Most of them say that prices aren't likely to drop in the near future. The housing market's coming off a year in which home prices basically had an unsustainable 18.8%. I agree with that, and they will slow down. Coming on down, however, they subsequently determined that even this rate was too conservative. The home listing site now predicts that the year-over-year rate of home price growth will hit 22% in May. 22%. So it's actually increasing in the short term. An acceleration of home price growth, it would then gradually slow through February of 2023, by the end of which the typical U.S. home is expected to be worth almost $400,000. This robust long-term outlook is driven by their expectations for tight market conditions to persist, with demand for housing exceeding the supply of available homes. And that just goes back every single time to the supply-demand of homes. Coming on down, The shortage of inventory has created a red-hot housing market with homes selling within hours of being listed, frequently for well over asking price. According to many housing experts, buyers can predict similar trends this year to those seen over the last 2 years. Increased prices, low inventory, and quick turnaround. That's what they are predicting. And then obviously monthly affordability will suffer as interest rates rise. They don't see this necessarily stopping. They only see it slowing. Fannie Mae predicts that double-digit home price rise will continue until the middle of 2022. Still, it won't be until 2023 that home value appreciation recovers to the pre-pandemic rate of 5%. That's still a hot housing market. Based on this, prospective investors may be pessimistic about the 2023 market. While prices are not expected to fall, Fannie Mae anticipates that price growth will be slower than usual in 2023. I agree. It'll just slow down, but it'll still take time. And then the inventories have to replenish. Zillow's housing market forecast in 2022 has improved. The real estate listing site now claims that its previous forecasts were too pessimistic. They're still going up at faster rates than what most people think. Their bullish long-term outlook is based on their expectation that tight market conditions will persist, with housing demand exceeding supply. Again, they forecasted a 22% increase in May before gradually slowing to 18% in May, before gradually slowing to 17.8% by February 2023. That is still a hot housing market. These guys, this is ridiculous. So looking at this is the home SAR. This is the year-over-year growth. It's slowing back down to 18% by next year. So we're going to peak at 22% and then slow back down to an 18%, which is still incredibly fast for the housing market. Very robust long-term outlook is driven by the expectations for tight market conditions year over year. And again, the forecast year over year is going to slow down out there a ways. Home price growth is expected to decelerate in the coming quarters after peaking in quarter 3 of 2021. That's what they had thought. It is still red hot. The actuals for 2022. Forecast snapshot, they've got that their house price growth. They do have it slowing a bit before. That's what they had in January 2022, but they were too pessimistic for that. Housing market forecast with prices soar, sales decline. But that's what they've got. Home prices rose 15% in March, marking 121 consecutive months of year-over-year increases. And that's what I've got there. One thing I wanted to touch on, guys, I'm going to go to Fred Housing Starts. This is the housing starts update. The housing starts were just released today, 1.724 million. It is still very elevated. Last month was 1.728. This month was 1.724, basically flat. We are still in an expansionary phase. It's still looking good. Looking at the housing permits, the new privately owned housing permits is 1.819. Last month was 1.879, down a little bit for permits, but still historically far above the average. And we're still in an expansionary phase and everything still looks really good. So overall, the housing market, everything that I look at the data-wise, and yes, I don't look at these doom and gloomers who have no idea about the market, guys. They don't. I think that article is well written. I think that's probably the most likely case. I think that will slow down some in the rate of appreciation of homes. The volume of homes is still remaining elevated. We're still in an expansionary phase. This is still going to be inflation driven. So I think that we're going to see a slowdown in the overall markets. I think that we're going to continue in a hot real estate market where things start to slow down some. That is normal as you get into an expansionary phase and as we progress. Now, if rates were to come back down because of the overall markets coming under pressure, we're going to see the housing market heat up again. So the Federal Reserve is in a tough spot. They're going to have to continue to increase rates, is my guess, to slow down the demand for homes, to slow it down. It won't stop it, but it could slow down the price increases where you'll see the rates and the growth rates start to slow down some. We're still growing. We're just growing at slower rates. And then I think the stock market's going to it's going to hurt. It's going to hurt the stock market. We're going to see a continued, I think, pullback in the stock market if they continue to tighten. So that's what I think. Will that impact our commodities? I think commodities will do very well as more homes are being purchased, as the inflation is persistent. And I don't think they can necessarily stop this inflation. I think they can slow it down, but I don't know if they'll stop it. So we'll see. We'll see what happens. We'll continue to monitor it. Subscribe to the channel. You can monitor it with us. If you guys are interested, subscribe to the Platinum membership for the website. What that will do is it'll get you better prepared for this next commodity bull market that is coming and precious metals bull market. And I think that everything is still intact for that to happen. All right, guys. We'll catch you next time. This is Finding Value.